Hello there, my friends. Chris Marcus here with you for Arcadia Economics. It is time, once again, for the weekly silver and gold market update with Arnold Schwarzenegger Kranzler over there flexing for the crowd. Is that what you do after you smash a tennis serve on someone? You just like stand over them like that? Do you ever get warned by the referee?
You know what? Believe it or not, the only time there's chair umpires is in these professional matches.
Yeah.
Or there might be like local tournaments that have, or big tournaments that sometimes get some national players that might have a chair umpire for the finals. But we don't have, when you just go play tennis, there's not a ball boy or a ball girl. There's not line judges.
So you're not getting any flags for taunting or showing off your buys and tries and like yell at the guy if his portfolio doesn't have any gold in there. It's like, you treasury investor. It's good to hear you're behaving yourself. And folks, this is Denver Dave Kranzler, and we actually are going to talk about gold and silver, believe it or not. Although, real quick, Dave, I'm trying to find out if I can make side market prop bets in the chat room of the videos each week. I don't know if that's legal yet, but there is a lot of market interest wanting to know if Denver Dave Kranzler, are you going to be wearing your Got Silver yoga pants and joining us for the pre-SilverFest meditation and yoga to stretch the mind and body and get them prepared for the festivities?
I'm going to have nothing but a thong on.
Yeah. Okay.
Listen, man, I'll still be in bed when that event is happening, but I will say the lineup for your SilverFest looks really strong. There's a lot of big high profile names on that list. So I mean, I'm participating in a couple of the panels. I'll end up watching a lot more of it than what I'll be participating in.
Well, I sure hope so. I mean, I wanted to create something that, I kept thinking about how people pay $5,000 to hit grounders with the 1952 Yankees for a week or so, and really create the equivalent of that for silver investors and enthusiasts. And perhaps, I don't know, maybe the top panel actually is not, well, there's Denver Dave, Ask the Expert, so people can ask questions. That's a panel you're on. But Dave, obviously being the titan of the gold and silver industry that you are, due to popular demand from 4:30 to 5 p.m. Eastern on Sunday, we will have Ask Denver Dave with Dave Kranzler of Investment Research Dynamics. So I know a lot of your fan club is going to be excited about that, and it's going to be a fun weekend. So we'll look forward to seeing you there.
I mean, I'm worried no one's going to show up to that Ask Denver Dave thing. I mean, if you got limited time this weekend, are you going to rather watch Mark Faber, Edward Griffin, or Denver Dave? I mean, I know what my choice would be out of those three.
Well, fortunately, the times are staggered. So in the span of a couple of hours, people can hear Faber, Jim Willie, Christopher Mullen, Ted Butler, Dave Kranzler, Andy Scheckman, Bill Holter. We're even going to be rebroadcasting the Bart Hilton interview Sunday night, which I think, it's been on the channel twice now, but I mean, to me, it's like what the guy said there. If you didn't listen to anything else, but you just heard Bart Hilton's own words, and then for the rest of time when people are saying, is it manipulated or is that conspiracy theory? It's kind of weird that debate is still out there now with Department of Justice, Bart Hilton's words, CFTC even finally noticed something, fine, Bank of Nova Scotia. So anyway, we'll try and remove any mysteries. I think the stuff will be there for anyone who wants to get to the bottom of it. So we'll look forward to seeing you this weekend. Although since this weekend is going to be all about silver, and I know you're still a big gold fan, which gold's great and all, but we'll give gold a little attention today and talk about how gold really should be valued, especially with renewed interest in the sector. A lot of people coming in for the first time. I think people are wondering, like, okay, goes up, goes down. What really is it priced on? Certainly in today's manipulated market, it doesn't react to the fundamentals. So, Dave, what would you say to someone who's wondering really what is a good framework? We don't have to get an exact number, but at least some things to think about of what makes sense and why so many people feel the way they do about it.
I mean, it's simple to find out where gold should be valued. Just log into investing.com and pull up the commodities tab, and you'll see the price of gold. That's where it's valued.
That is, now you see why we have the Ask the Expert panel, because there's really the type of insight and analysis you cannot find elsewhere. So, Dave, if that's what gold's worth, why buy it then?
I mean, what are you going to do? You're going to hold dollars?
Well, I guess since you're being
you gonna hold treasuries? You gonna hold Tesla stock? Where are you gonna put your money?
I've been thinking,
put your money if you don't want it to lose its value. I mean, I can see that right now the market, whether it's rigged or not, is valuing the price of gold at December gold, which is paper gold, at 1965. And so I'm reasonably confident that if I pay $1,965 for an ounce of gold, it will have the same purchasing power 10 years from now that it has now. It may even have more. I'm very confident that the US dollar, if I held that same $1,964 in US dollars, I am 110% confident that it will have very little of the purchasing power in 10 years that it has now. So that's why you buy gold.
Dave, are you going to come on the air and actually tell me you think that the deficit is going to get bigger? I mean, they're going to cut.
That looks like a console from NASA. I mean, is that the latest rocket they've sent up to try and make it to Pluto?
Well, yes, I agree with what you're saying, and it makes a lot of sense. Although perhaps let's take a step farther back where, I mean, you can make the argument that the price of gold never changes. So an ounce of gold, it's worth an ounce of gold.
Actually, that is correct. That is correct. The price of gold, I mean, you could say that, you know, the price, the value of gold, the purchasing power of gold has stayed constant for the most part for hundreds, maybe even thousands of years, right? Essentially. So it's just kind of depends on your perspective, right? Isn't that kind of how Einstein figured out the theory of relativity? Depends on your perspective. But you're right. I mean, essentially, when you see the price of gold, now it's 1,963 on December gold on the COMEX. What's changing is the quantity of fiat currency required to buy that gold, right? So they keep printing dollars, and the dollars, each marginal dollar printed loses its value. You know, it dilutes the entire pool of dollars that are out there, right? Because there hasn't been additional wealth created to back those dollars. So it takes more dollars to buy the same amount of something, call it a widget, right? What do they call it in economics? Utils, your bag of utils. So you have a bag of utils.
Utils?
We called it back in the early 1980s when I studied economics.
What economics program did you get suckered into? You got an MBA. That's probably the problem.
I got suckered into a very good one because I exempted out of the economics course requirements at the University of Chicago when I was in business school there. So they clearly respected the economics program where I studied undergrad. But anyway, that's neither here nor there. So you have your bag of udels. That's what I don't know what they call it now. I mean, now the education system's all newfangled and politically and
We don't even know
diplomatically
how to
correct.
price udels now, but let's,
I mean, okay, guns and butter, okay? So you've got your refrigerator full of butter, right? Okay, so as they print more money, to buy that same amount of butter after they've printed money requires more dollars than it did to buy the original refrigerator full of butter, right?
how much
Guns
butter
is
do
a
you
different
have in your
story, but
refrigerators?
so at any rate, your point is well taken. Essentially, as Voltaire said, the value of fiat currencies always regress to their long-term mean value, which is zero. That's a paraphrase of what he said. And so you're right. You could look at it as saying, hey, the price of gold isn't going up. It's the value of the currencies used to purchase an ounce of gold are declining. And we know that they've declined, something like 80 or 90% since 1971. Correct? And that's
Yeah,
easy math to do.
it's kind of funny. We have the Federal Reserve balance sheet. I love this headline: recent balance sheet trends. I guess you could call that a trend upwards. Like a trend, like, maybe some, another century or two, it might go down. I guess they don't even show you back farther. This is clicked on to all. So,
Hey, by the way, before you make your point here, I just did the math. So before Nixon closed the gold window, the price of gold was fixed at $35, right? So essentially, if you take the increase in the price of gold relative to the dollar versus 1971, the dollar's lost 98% of its value relative to the price of gold.
yeah, well, I mean,
Just a simple calculation.
well,
In 1971, it took $35 to buy an ounce of gold, and now it takes $1,962 to buy an ounce of gold.
yeah, but Dave, you got to be careful with that low inflation out there. As fortunately, Jerome Powell's on top of. It's only going like, well, there. I love how at one point he claimed there was a past deficit. Like it's, you didn't have enough tomatoes a given year. It's just like you said, it's the perspective on these things, and it's like sometimes they don't actually lie, but they just, oh no, can't have too low inflation. We got to pick up the speed.
To circle back to your original idea here, which is, what's gold worth, right? Or what could it be potentially worth? I mean, I used to go through this exercise all the time when I first got into the sector back in 2001. And I mean, there's a number of different ways you can look at it, right? And none of them are you can't say any one of them is correct, but you can't say any one of them are incorrect. So before Nixon closed the gold window, the way that the gold backing worked for the dollar as the reserve currency, which Bretton Woods established, right? The U.S. Treasury had to hold an amount of gold that was at least equivalent to the amount of Treasury debt that foreigners purchased, right? So the idea there was that foreigners could take their Treasury certificates and mail them to, the various Treasury secretaries after Bretton Woods and before 1971 and say, hey, I'd like to turn these pieces of paper in and get the equivalent value in gold per the Bretton Woods Agreement.
Now what you get is a negative yield. No gold, just
negative real yield, that's for sure. So, I mean, if you said, okay, and I haven't looked at the numbers in a long time, but I think foreigners hold, let's just say they hold 5 trillion in worth of treasuries. And let's make the assumption, which is it's a very poor assumption. It's it's likely an invalid assumption, but let's just say, okay, the US has 8,100 tons of gold, right? So if you divide that out, and it's too much math for me to do right now, but it's probably going to come up to somewhere around $15,000 or $18,000 per ounce of gold. That's what the value of the 8,100 tons of gold that supposedly the U.S. Treasury owns and the Fed has custody of. That's what each ounce would be if that gold were priced such that it backed all of the debt that were held by foreigners. Okay, so that's an example of one method you can use to say, okay, what's the fair value for the price of gold? And if the world like pointed all of its nuclear missiles at DC and said, okay, we're resetting the price of gold after you show us your 8,100 tons, and let's assume that it's there right now, but we're repricing the gold so that the value of that gold backs the treasuries held by us, the foreigners who have financed your spending in your profligate ways. So, that's one methodology. You could say, okay, based on the Bretton Woods test, gold should be priced at whatever that number is, 15,000, 17,000. The people in the audience can do the math. It's a roughly what, 32,000 ounces of gold per ton, ballpark, depending on if you're using a metric ton or a short ton.
Yeah, and Dave, I'm giggling out here. I'm going to have to show you this because as we're recording this, talking about the inflation of the dollar, there's a real estate bubble, new condominiums in my hotel in Minnesota today. So as we're talking about purchasing power getting destroyed.
I wish I had an ability to short those buildings.
I mean, it's just...
They're definitely not worth now what they were prospectively worth when they started construction on that.
I mean, it's incredible. Although back to what you were saying about gold there, yeah, I think that makes a lot of sense where, again, it's one of those perspective framework things that Keynesian central bankers and, politicians like to twist and distort. But I mean, it's like if we take a step back, the whole thing they sold us 50, 70 years ago was that we were using gold as money. We're going to use these little green things called dollars, but it's backed by gold. So when people come along like it, go ahead, sir. You look like you're about to explode. It sounds good.
No, I'm not about to explode. I was just gonna add some stuff, but keep going. I don't want to ruin your train of thought.
Well, just that it's like people act like, gold. I mean, Warren Buffett and how are Warren Buffett and Ben Bernanke that perplexed by gold? I mean, they were alive when gold was money. And hey, if you want to tell me that the system wasn't functioning on a true gold-backed dollar, I'd be the first to agree with that. But I'm just going on what they've sold our entire country was that gold is what we're using, and the dollar is just some representation of a certain amount of gold. So unless you're going to come clean and acknowledge, not you, but the system and these guys are going to come clean and acknowledge that I guess they've acknowledged we've abandoned it, but if that's still the concept and you think of what should, not gold, it's not gold, how should gold be priced, how should the dollar be priced, at least a good theoretical framework. I mean, again, how many dollars really are out there? The Fed their calculators couldn't keep calculating M3 anymore, so they gave up on that one. Skidmore and Catherine Austin Fitts have calculated, I know they documented 21 trillion. I think they found more. And if we found 21 trillion of missing dollars, how much is out there that we haven't found that the Exchange Stabilization Fund is doing? I mean, I'll bet an ounce of silver that whatever the Fed tells us they're printing, numbers probably a lot more than that. But still, if we knew the actual numbers, am I correct that just to say if the relative, not priced in dollars, but what does that fraction should be? Well, you can look at the increase in the gold that's out there over time and look at the increase in the dollars, and it seems pretty simple.
You don't need to try and figure out what the true money supply is. No one knows. I mean, you know, and you don't need to like add in the 21 trillion. A lot of people think that's conspiracy theory. I'm not saying, I'm agnostic on that whole thing. It's probably true, but who knows? I mean, the point is if you just we're just using the latest test for a gold backing of the fiat currency system. Well, not fiat, but of a monetary system, right? And just using the Bretton Woods test, which is a lot less stringent than it was before Bretton Woods. Back then, before that, I think most major central banks of major countries kept something like 40% of their currency reserves in gold, and that was your backing. So you just come to the conclusion that gold is if we went to just a partial backing, which is what Bretton Woods was, you'd have to reset the price, you know, by a multiple of 7 in order just to get a partial backing, or, you know, the Bretton Woods test for you know, what the value of gold is relative to the currency that it's backing. You see what I'm saying? I mean,
Yeah.
and then you just go from there. Well, if we were ever to go to a strict monetary system where we're, you know, central banks have to hold 40% of their reserves in gold, you know, then you're talking multiples higher than the Bretton Woods test. So, I mean, that's really, I think, the relevant conclusion that you can draw from this conversation.
Yeah.
And if people are wondering why, so the idea back then was, in 71 was, oh, well, we don't need gold to back the currency because we've got the Federal Reserve, and, you know, it's just as good as gold in terms of maintaining stability and confidence in the currency, right? I mean, it's an absurd idea, but anyway, if the audience is interested in why gold is used, or why it should be used, and why it's the best backing for a currency system, read Alan Greenspan's Golden Economic Freedom that he wrote in 1966, way before he was ever fingered to become part of the establishment, you know, the Keynesian establishment. And it's easily the best treatise I've read in 20 years of doing this sector that explains why the gold backing works and why it's lasted for as long as it's lasted.
Well, Dave, I agree, although, you know, there is one better way to get the answers to those questions. You know that, right?
Tune into
You can
Arcadia Economics
sign up for
podcast.
SilverFest at 4:30 to 5 Eastern this Sunday, September 13th. You can ask Denver Dave Kranzler in person. So, not to be adversarial, but just got to correct you on that one. Yeah, it's kind of funny. I mean, I hope this comes across in the right way. I mean, in terms of throwing a silver conference, I mean, you know, I don't like to think of really things in terms of competition, although I guess in this sense, we're beating the competition, because in terms of silver specific events, I mean, there's almost, I haven't found any others out there. I know there's been a couple here and there, but it's interesting. You know, I don't know. It's just kind of funny to imagine who might show up. Maybe Ben Bernanke is signed up. I mean, if he doesn't understand gold, who knows? Maybe he'll try and learn what's going on in the silver market.
He understands it. You know what? He knows, and he knows that everyone knows. Everyone who knows what we know about monetary policy and monetary systems
Have you been
knows that
the
he knows.
Stock Journal?
He's a serial liar. I mean, you have to be the head of the Federal Reserve. I mean, look at the current guy we got there now. I mean, he can't even hide the fact that he's full of crap.
Well,
Greenspan did the best job I've seen of hiding the fact that what he was espousing was full, you know, he was full of crap. And occasionally he would drop, you know, little assertions that would let you know that he knew that you knew he was full of crap, but that he's not really full of crap.
Well, you know what else he had a reputation for? There was someone telling me this. It may have been Dr. Mark Faber. I'm not sure. So I don't want to put words in. I think it was him though. Someone was telling me that they were in the room with him and they were talking to him and they asked some question and he just like kind of like mumbled an answer that no one could hear so he could skate out of there, which is just part of the incredible history of the Federal Reserve. Although, Dave, last one before we wrap up today, because you talked about this a couple times, I get this question from time to time. People say, has gold been a good hedge of inflation? I would say, in some senses, no. I mean, we're buying gold or silver because we think they're underpriced. And we talk about gold and silver manipulation. And even as much, I see you already getting riled up there, pulling up a chart, but even as much as the price in dollars of gold and silver have risen, I would say right now they're pretty undervalued based on the money supply and what you can buy in some cases. So on one hand, I mean, and it's taken some felonies to make that happen, but you get what I'm saying? Where there's also, you know, and on the other hand, I mean, I think over time it will, and that's part of why we expect in dollar pricing quite a move upward. But you look like you're already ready to jump through the computer.
How do you fucking measure inflation? Tell me how you're measuring inflation. It's first of all, it's a nebulous argument to say has gold been a good hedge against inflation. You want to know what? In 1971, a Cadillac Eldorado was roughly $4,000. Okay, at $35 an ounce, it took 114 ounces of gold to buy a Cadillac Eldorado. Right? Okay. Fast forward to today, the same equivalent Cadillac is, let's just call it $65,000. All right, call it $75,000 if you want. The argument still holds water. It takes 33 ounces of gold to buy the same equivalent car. Okay. So you tell me, you can do the same thing with college education, all right? You do the same damn thing. It takes less ounces to buy the college education that I had from 1981 to 1985. That was roughly, call it 12,000 a year back then, and now it's 65,000 a year. It takes less gold now to buy the same education as it would have taken in 1981. So there's two things that people buy every day. College degrees and Cadillacs, and gold has more than offset the effect of inflation.
Well, the only thing I can say in response to that is that, folks, that's why you want to sign up for SilverFest, which you can do right on the Arcadia Economics homepage. Click here to register, because then you can have access to the Ask Denver Dave panel, where if you're lucky, you can get berated like Chris Marcus of Arcadia Economics. But I will throw in, just to sweeten the deal a little farther, in case you can't wait till this weekend, which would be understandable. That's why we have investmentresearchdynamics.com, where you can find the Mining Stock Journal, your podcast with Trevor Hall.
Here's another one. Okay.
Sellers Journal.
The house I grew up in 1970 or 71, whenever my father bought it, back then it would have taken 1,285 ounces of gold to buy it, right? Fast forward to the most recent sale price of that house a couple of years ago, it would take 321 ounces of gold to buy the same house. So you tell me, did gold keep up with inflation there? It's kept up. It's more than kept up with housing inflation, automobile price inflation, and college price inflation. What else do you need?
How has the price of the Mining Stock Journal kept up? I've heard that help people hedge inflation for only $20 a month. You get 2 episodes, and rather than being like a confused MBA student like I was listening to Ben Bernanke and the Fed, you can actually get insight before these bubbles unfold. I would also add, Dave, that you have a track record. You wrote about the housing bubble before it unfolded. Ben Bernanke was completely flummoxed. Hank Paulson and Goldman Sachs apparently unable to see it either. I don't know. Maybe it's possible they saw it and were just selling another shitty deal as Carl Levin was fond of saying. But there you can hit the subscribe button and get your mining stock journal like Chris. Yep, I get mine. We got one coming out today, Dave?
No, next Thursday.
Next Thursday. All right. Well, thank you, sir. As always, it's been great catching up, talking about gold, having my theories pummeled like a Dave Kranzler overhand serve. I know people have questions about that. Again, this Sunday is when you can tune in. So thank you, sir. We'll look forward to seeing you this weekend. And
likewise, I'm looking forward to SilverFest.
Yeah, it's going to be a fun time and a lot of great people coming. And go sign up now. And for anyone who's still on the fence, well, I think you'll want to see what's coming your way now.